The silver market is on the verge of something massive. This afternoon, as I looked at my Bloomberg terminal, something felt off. Silver was up 4.21%. Gold, barely budging. The spread was tighter than it's been in weeks. But the headlines, they're all screaming about silver's collapse, claiming the bull market is over. That weak demand is destroying the precious metals thesis. Something doesn't add up here. Here's what they're not telling you. Right now, as I'm recording this, there's a $7 billion sell order being executed in the shadows. And this isn't panic selling from retail investors, nor is it a hedge fund abandoning precious metals. No, this is coming from index funds, which are legally required to dump their silver holdings by January 15th, whether they want to or not. But here's where it gets interesting. Despite this massive forced selling, silver is outperforming gold by 5 times today. Think about that. Billions of dollars in sell orders flooding the market, and silver's price is still climbing. That tells me something specific is happening beneath the surface. The physical buyers are absorbing the blow. I'm about to break down exactly what's happening, show you the math behind this liquidity vacuum, and tell you exactly what I'm watching in my own portfolio over the next 120 hours. This isn't advice. I'm not your financial advisor, but I've seen this pattern before, and I know what it looks like when paper markets diverge from physical reality. By the end of this, you'll understand why the current price is a lie, why January 15th is the line in the sand, and how to spot the signal that tells you when this forced selling finally stops. But first, you need to understand something critical. If you try to catch this falling knife too early, you will get cut. Now, let me explain exactly what's going on. We're officially in day 2 of a 5-day rebalancing window. The Bloomberg Commodity Index is slashing silver's weight, dropping it from 9.66% down to 3.94%. That's not a mistake. It's more than a 50% cut. Every fund that tracks this index, every passive vehicle legally bound to mirror its composition, has no choice. They have to sell. They must sell, no matter the price, no matter the fundamentals, no matter what's actually happening in the physical market. This is what I call a phantom event. Retail investors see the price action, panic, and think something's fundamentally changed. They read the headlines about weak demand and start questioning their investment. But here's the thing. While the world watches this forced sell-off, the real story is unfolding in the liquidity structure of the paper market. No one's talking about it. But let me put this in perspective. Despite the $7 billion of forced selling, silver is outperforming gold by 5 times today, billions in sell orders, and silver is still climbing. That tells you there's something else at play here. The physical buyers are stepping in, absorbing the blow. And this is where it gets wild. No one in the mainstream media is connecting the dots. It's all happening in real time, and I'm going to walk you through the exact mechanics of this situation. What's happening now isn't a crash. It's a liquidity vacuum, and understanding it could change everything for your portfolio in the next 5 days. I'm making a big claim here. What we're witnessing is a massive passive selling directive creating an artificial price floor for silver. And here's where it gets critical. This price floor will expire at market close on January 15th. This isn't a fundamental decline. This is not a loss of faith in precious metals. It's not about supply and demand. It's a mechanical process driven by index rebalancing rules that most retail investors don't even know exist. Let me show you what I mean. I'm going to break down what I call a passive flow shock. And I'll show you the math behind this rebalancing collapse. But here's the truth. Timing matters more than your conviction right now. The sequence of events is key. If you try to catch this falling knife too early, you will get burned. This is all about patience. And if you rush in before the rebalancing is over, you're going to be swimming against a $7 billion wave of forced selling, and that's a fight you can't win. Let's talk escalation. This situation is heating up fast. What we're seeing is a forced sell-off that's becoming normalized. And when you normalize something this extreme, you create a situation that's more dangerous than most people realize. Think about it. In the past, this type of mechanical event might have been viewed as a one-off, something that would quickly correct itself. But now, this forced selling is becoming routine. And that's what's dangerous. It's becoming a normal part of the market structure, even though it absolutely shouldn't be. To put this in perspective, the situation right now is eerily similar to something we've seen before, a historical precedent. Back in the day, when oil markets were hit by similar rebalancing events, they got crushed. Prices plummeted in a matter of days. But what happened next? a violent snapback once the forced selling ended. This isn't the kind of thing most investors are prepared for. The market is in a frenzy and no one's talking about the real reason behind it. Now let's dive into stronger evidence. This next piece is crucial. While silver's price is climbing despite billions in forced selling, the most telling thing is the contradiction between what's being said and what's actually happening. You've heard the headlines. They're claiming the bull market is over, that demand for silver is weak. But look at the numbers. Even with billions of dollars worth of silver being sold off, the price of silver is still climbing. That tells you everything you need to know. Someone is absorbing all that selling. And it's not just any buyer, it's physical buyers with deep pockets stepping in to scoop up silver at these artificially depressed prices. This is where things shift. The price you see now, it's not the real price. It's an illusion created by a forced market event. And once the selling stops, that illusion will vanish and the price will snap back hard. This is the moment when the market will finally wake up to the reality that silver's true value has never changed. Let's stack up the pressure. In the last few hours, we've seen a series of related developments that are adding to the chaos. First, the $7 billion in forced selling, then the physical market's tightness. And now we're watching the rebalancing window closing in fast. It's a perfect storm. And here's where it gets really intense. The selling pressure is relentless and the market is losing control. Prices are being pushed lower, but the liquidity is drying up and the buyers who would normally step in to stabilize the market are pulling back. Why? Because they know the deadline is coming. They're waiting for the moment when the forced selling ends and then they'll swoop in to grab everything at bargain prices. What happens if this continues? If the pressure keeps building, if the sell-offs continue without a clear end in sight? It's simple. The price will reach a point where it can't go lower without triggering massive buying. When that moment comes, expect the market to snap back violently. It's only a matter of time. Now, let's talk about the human side of this. If you're watching this, this isn't just about numbers. This is about real people, real consequences, people just like you, watching this market swing wildly, trying to figure out what's next. And here's the thing. If you've been in silver or precious metals for any length of time, you know this feeling. The fear, the uncertainty, the headlines telling you the bull market is over. But let's remove the noise for a second. What happens if you get caught in that panic? If you follow the mainstream narrative and sell into the chaos, you lose. It's that simple. Fear will drive you out of the market at the worst possible time, right before the recovery hits. So if this situation feels familiar to you, if the uncertainty is ringing a bell, let me know in the comments, because this is exactly how these markets work. The media drives fear, retail reacts emotionally, and patient investors who stick to the data are the ones who come out on top. Now, let's zoom out for a moment and get some perspective on what's really going on here. This isn't just about silver, this is about the systems that allow these events to unfold. The structure behind all of this, the leverage, the incentives, the spectacle. What's happening right now in the silver market is a perfect example of how systems and power work behind the scenes. It's a game where the rules are set by a small group of players and they control the flow of money, the timing, and the narrative. They know exactly how to push the buttons to create fear, uncertainty, and ultimately profit. Here's the unsettling part. The people behind this rebalancing don't care about the fundamentals. They don't care about industrial demand for silver or the broader economic picture. All they care about is the mechanics of their rebalancing and the timing. Once you understand that, you start to see how small players like you and I can get trapped in this system. So what's next? Let's look at where we go from here. There are two paths forward, and both are filled with uncertainty. First, there's the possibility that silver continues to see this forced sell-off, with the price continuing to drop even after the 15th. That would mean more pressure on the physical market, and it could push prices even lower before they finally bounce back. On the other hand, the second path is a sharp recovery once the rebalancing stops. Once that $7 billion in forced selling is completed, the pressure will lift and the market could snap back with incredible speed. We've seen this happen before in other markets, massive sell-offs followed by violent rebounds. The problem, we don't know for sure which one will happen. What we do know is that the moment the forced selling ends, the market will be a different place. The key is understanding the signals, watching the gold to silver ratio, open interest, and those critical data points will tell you which way the market is leaning. Let me bring this all together for you. We're sitting at a critical point $1.7 billion is being forcibly sold by January 15th, and it's creating a temporary liquidity vacuum that's pushing silver's paper price down, while the physical market is absorbing all that selling and the spot price is climbing. This is a golden opportunity created by a mechanical flow that has nothing to do with silver's true value. The paper price is a lie, and the fundamentals, they've never changed. What you need to watch for now is simple. January 15th. That's the line in the sand. Once that deadline hits, the forced selling is over and the market will move into its next phase. But don't expect an announcement. The opportunity won't come with a press release. It'll come quietly when the price starts to shift and the signals line up. Watch the open interest, watch the premiums, watch the gold to silver ratio. And when the time comes, don't hesitate. The market is going to move fast and you'll want to be ready. This isn't a guarantee. There's risk, of course, but based on the data, the most likely outcome is a sharp reversal once the selling stops. So if you've been waiting for the right moment, this is it. And if you want to stay ahead of the curve, stay tuned for more updates, because this story isn't over yet. It's just getting started.